From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 26, 2018. Today we're going to take a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. First thing is we want to recognize two different trends here on the daily time frame. The blue trend line, previous rising trend, and the black trend line, the current falling trend that we see here for the Australian dollar. And I say current falling trend, but we've had a little bit of a different trend pattern, haven't we? You can see the blue trend line was more like a straight line trend, and the black trend line has been waffling back and forth. We've seen falls, we've seen rises within the trend. We're currently holed up inside this black box down here. You can see for the past week or so, finding support into the blue zone, 77.15, 76.90. Green zone is resistance, 77.45, 77.65. And we've been bouncing around in here for about a week now, finding support at the blue zone, resistance at the green zone. We also have the 100 period moving average sitting just above the 77.65 level. So we know that this area of the green zone here, is resistance. Not only do you have the 100 period moving average there, you look back here where the two blue circles are, you can see support here and support back here, and even right here in the middle I could put another blue circle there just to show that support into that area. So we see all three blue circles showing support into the green zone. So we have support, historical support at the green zone, 77.45, 65. We have the 100 period moving average. We also take Fibonacci of the low to high of the blue trend line. Fibonacci low to high of the blue trend line puts the 0.618 Fibonacci retracement level at 77.43, which is the bottom of the green shaded area. So we have several things lining up here to offer us a clue to support right around that green shaded area. So that gives us first off, the reason not to take a long. We don't want to buy underneath such strong historical support, historical resistance, support acting as resistance. We don't want to buy into the 100 period moving average. We don't want to buy under the 618 Fibonacci retracement level. Just doesn't really become a great place to go long and buy the Australian dollar. Now, if it breaks all of that, gets above it, that changes the picture. But for the time being, buying underneath there just doesn't seem like a logical solution. If you were going to buy it, it has to break there or come back down to the blue zone, which of course is our support, 77.15, 76.90. Now, if you're not buying it, maybe it becomes an opportunity in the direction of the trend to look for a short as it rallies into that same orange or green shaded area. So we look for it to come up, find resistance, provides lower risk and higher reward for the long or for the short, and then we look for it to go down to the blue zone. Of course, a breakdown of the blue zone, we would look for the continuation lower down from 76.90 under the blue zone back down to the orange zone, which happens to sit down here closer to 76.50, 76.30. That is all in the direction, of course, of the current trend pattern, which is the bearish trend. So a significant resistance indicated by several different things: historical support, Fibonacci, 100 period moving average. We also note that the Forex Black Book is red, which is more of a bearish bias and bearish momentum based on the weekly and the daily time frame. So we know we have several things lining up and stacking to provide us a clue that selling might be a better opportunity, at least lower risk higher reward opportunity, than buying underneath that green shaded area. Let's go ahead and take it on down to the 4-hour time frame, and there it is even today, finding some resistance underneath 77.45 and holding underneath it for the day today. So if you're looking for an opportunity here on the Australian dollar, we need it to stay under the green shaded area. We look to target back down to the blue shaded area, and then we look for it to go back down under the blue zone and continue the overall downtrend. We have had a recent yellow sell signal for the Forex Black Book. I would really actually like to see another quick spike into the green zone, a sudden sell-off leaving a bearish clue, a bearish candle, whether it's a bearish engulfing candle or something like an inverted hammer or a shooting star candlestick. I'm looking for something around this green zone to give us confidence that there are still sellers here. Of course, clearly a breakout above the green zone changes everything for the Australian dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.